We start with our own Tom White, who's looking at some of the expectations for this name, which is down 1% today. Thoughts and expectations on Micron's earnings. Good morning, Tom.
Hey, Nicole. Yeah, the bar's pretty high on this stock going into earnings. The stock's rallied, basically about 35% so far this month, up over 50% this year. It's overbought on a technical basis. The RSI is 80. Anything above the 70 level on that relative strength index is considered overbought. Doesn't mean it can't continue to move higher, because you start looking at some of the, the metrics and the fundamentals behind this company. They're providing all this high bandwidth memory chips for the AI infrastructure build out, right? Their revenue grew 50% in that segment last quarter. Year over year, and it brought in over $1 billion in revenue. Now, if you look at the valuation on this stock, the trailing PE about 30 level, but the forward-looking PE is only about roughly about 14 or 13 at this point. So it doesn't have a big valuation at this point compared to some of maybe its peers within the chip segment. Now, it's really cyclical business. You got to remember memory chips and some of the growth rates. Revenue is expected to grow about 30% year over year this quarter. The growth rates with those comparables for last year, which were extremely low due to slumping sales as far as memory chips goes, those are going to be skewed a little bit. But, the optimism going into this report, pretty spectacular at this point with overbought levels, but we're still not at all-time highs in this stock either.
Look, when we saw Nvidia, now I see Nvidia stock opens at record highs. We were just talking about the stocks. I mean, the group overall has had a lot of optimism surrounding it. Hold the thought, Tom, because we're going to get back to you in a moment. Dan Morgan, Senior Portfolio Manager at Synovus Trust Company, joining me. Some of your thoughts on Micron today, Dan?
No, I would agree with your other guest. I mean, it's a stock that's been coming off of a cyclical low in terms of demand for DRAM and NAND. We're starting to see those cycles move higher as the overall chip space continues to improve. And then coming into this third quarter, obviously everything's going to be banking on how much growth are they getting with their high bandwidth memory. It's really being driven right now by Nvidia in terms of their Hopper 200, also their new Blackwell chip, and also with the release of the new ChatGPT 5 in terms of large language models. That's also going to put more demand on that high bandwidth memory. And Nicole, just to give you an idea how important that is, going into next year, they're expecting about 20% of their total revenues will come from high bandwidth memory. So really being driven right now by AI and also a recovery in the overall chip space in terms of demand for memory.
And also, as we look at the two, Nvidia and Micron, how has Nvidia's ramp benefited Micron, if at all, in your opinion?
Yeah, what's been extremely important. I mean, right now they're shipping high bandwidth memory number 3, which is pretty much aligned with their Hopper chip. They have their new Blackwell chips that are coming out right now. Obviously, they're ramping up for that, being Nvidia. And of course, that'll put more demand for high bandwidth memory number 3 and high band memory number 4. So that's the latest chip that's coming out in that space. And those are all aligned with Nvidia. So Nicole, it's interesting because I would expect if Micron has a really good report and they get really strong demand from AI chips, which is mostly Nvidia, I would expect Nvidia and all of the chip stocks in that space to trade higher.
And that would be good news, ultimately. So you're more on the upside potential for this group and new highs overall. I mean, when you look and you weigh all the factors here, I'm seeing all your charts that you sent as well. What's the catalyst that helps this group move to the upside?
Well, I think it's just confirming the AI trade, that it's still intact, that we are seeing it trickling down into the memory space. As your other guest was saying, I mean, Micron is not cheap right now. It trades at about 2.7 times book value. It's trading at about 11 times fiscal year 2026 earnings estimates. Typically, it'll trade around 14 times earnings. You got to bear in mind, Micron's a stock that's very cyclical and will trade at very low PE valuations in the single digits. So again, Nicole, it's really all about confirming this trend is still in place and then it's trickling down beyond just what we're seeing, for example, with strength in, let's say, Nvidia or AMD, that's actually showing up in the memory space. So Micron's a great indicator of that because there's such a huge swath of the memory market.
And do you recommend folks buy these stocks? I mean, at these levels here?
Nicole, I would wait for the stocks to pull back a little bit. I mean, Nvidia, I believe, is trading near an all-time high again. It's a very volatile stock. It can trade down close to $100 a share. Micron has pretty much doubled in a very short period of time with the recovery in the memory space. So I think that, if you're looking to, add to these positions, I think you need to be prudent in regards to trying to catch them on a downside. I mean, there's still a lot of potential risk in the space, as you know, Nicole. The 90-day reprieve in terms of, PCs and smartphones, if that was to be lifted, that would put a huge downdraft in terms of concerns about tariffs on that space. So there's a lot of volatility. Stocks are trading way up in anticipation of this. This should be a good number. But again, you have to be prudent in terms of finding your entry points.
All right. Dan Morgan, thank you so much. Senior Portfolio Manager, Synovus Trust Company. Thank you, Dan. So let's get to trading Micron, which has been in an uptrend since it was at a low of just around $61. Tom White is back with us to take a look. You have, in fact, a bullish example trade that you're going to share, and then some more.
Yeah, Nicole, you look at the options market, volatility is elevated in this one. The option market's pricing at about a plus or minus 8% move in the shares, about $10 either way on this one. So you're seeing a really big dispersion between near-term implied volatility levels, and then if you go out in option series, it starts to tail off a little bit because all the event risk is in this week's options at this point. I mentioned that it's overbought. Doesn't mean that it can't go higher. We've seen a lot of unusual call activity. We talked about this yesterday on the watch list. There were call buyers up to the 140, 145 strike in here going into this report. So the sentiment's definitely leaning to the upside, but they better hit every metric, beat every metric, and then probably raise guidance at this point just because the bar is so high. So I looked at something. If you think the stock is going to move higher, maybe about that one standard deviation or even further, this strategy takes advantage of it. I went out to the July 3rd weekly series, so just 8 days to expiration, and bought the at-the-money 126 strike call. And then against that, in the near term, June 27th weekly options that expire in just a couple days here on Friday, we're going to sell the 136 strike call. So there's that one standard deviation move. It's a bullish $10 wide call diagonal to the upside. You're paying roughly about a 420 debit for it. So you're paying less than half the width of this call diagonal. And that is because of those implied volatility levels I talked about. You're buying basically about an 80% implied volatility in that July 3rd weekly option series where you're buying the 126 strike call on aggregate in that series, selling about 135% implied volatility on aggregate in that June 27th weekly option. So there's that dispersion that lowers the price entry point on this. Now, where do you start to profit on a trade like this? It's a short-term position, right? Anything above about the 128 level is going to be potential profitability on this one. And you can see from the risk profile, the apex of profitability is right at or near that one standard deviation move or the 136 strike that you sold. But anything above about 128 is going to be potential profitability on this one.
All right. And you have one more example trade that we want to hear about where you may need a big move, but you'll tell us.
Yeah, you're still taking advantage of implied volatility levels between the option series on this strategy also, but now you don't have to pick a direction with this type of strategy. So I looked at a short-term double calendar here in Micron with the expectations, hey, it's going to move one standard deviation, but you don't have to pick a direction. So on this double calendar, in the near term June 27th weekly options, we're going to sell the 118 strike put and sell the 138 strike call. So you're selling both options in the June 27th weekly option series. And then in the July 3rd weekly options that expire in 8 days, we're going to buy those same strikes. We're going to buy the 118 strike put and buy the 138 strike call. So there's your double calendar. 138 strike on the upside, 120 or 118 strike on the downside. You're paying roughly about $1.10 debit for this double calendar position. That's your risk, $110 per spread. But you can see here from the risk profile, I make the most money on this type of strategy if the stock trades at or near the 118 strike on the downside or the 138 strike on the upside. But I've got a nice wide range between about 110 on the downside and maybe 145 to 148 on the upside to remain profitable. On this type of strategy, you don't want it to kind of sit where it's at right now around the 126 strike. You want it to move, but you don't want it to move maybe 2 or 3 standard deviations. You don't want to get a $20 or $30 move either way on this one. But this takes advantage of a range, and it also takes advantage of not having to pick those directions when placing a short-term earnings type play.
All right, Tom White, thank you for all of that. Clearly a lot of interest in Micron now with the earnings and those example trades. Thank you so much, Tom White. And as we noted on Nvidia, it opened at not an intraday record, but a record. It would be a record close for Nvidia at the levels we saw this morning. So we'll watch for that as well.